Welcome to your presentation for the lodging industry operational averages. It's important to point out that these averages have been taken from reports. The most recent report from CBRE is not yet available to us. Therefore, these will be averages from 2015. However, I'll explain how you can possibly look at how it would have changed. Important again to point out that averages include high and low values. So some provinces are going to have much higher labor costs, for example, again. It really just, the values are going to help you understand industry, and it's going to give you a benchmark. Okay? So it's not necessarily a target because in some cases you can do better, in some cases you may not. It really just depends on a variety of factors. So, property types in Canada. There's full service hotels, suite hotels, limited service hotels, and resort hotels. Your full service hotel would just have your rooms, your food and beverage department, anything like that. Your suite hotels would have less food and beverage, but you would have bigger rooms. Okay. Your limited service would possibly have no food and beverage whatsoever, and your resort hotels would have a variety of different profit centers within it. Okay. So in 2015, the average was 253 rooms for full service. Occupancy was 66.7%, and average daily rate was $157.81. For all the ADRs, you can assume a 4 to 5% increase each year unless there's a recession. Okay? In 2017, we probably would have seen more of a 10 to 15% increase for Ottawa ADR because of the Canada 150th. Okay? Occupancy generally ranges plus or minus 2 points, so percentage points. If it goes up too high, you usually will see more hotels being built. So if you see something like a suite hotel, so in Canada, suite hotels have 75.7% occupancy percentage. Notice how everything else is in the 60s. That means that there's an opportunity for more suite hotels. Okay? Some facts. Limited service hotels are generally the smallest properties, right? So that would be something that has less services available to you, mostly just rooms. Suite hotels generally have the highest occupancies, and resort hotels typically have the highest ADR. That's because they have more offerings, and you're going for more than just the room. And then limited service hotels typically have the lowest ADR, and that's just true because there's less offerings there. There's less services available to you. Okay, so where does it all come from? So full service hotels, revenue-wise, 67% of their revenues come from rooms, 27% from food and beverage, other operating departments 3.9%, and miscellaneous income would be 1.2%. If we go down to limited service, you'll see 0% food and beverage, so almost all of it comes from rooms. And that's why you'll see a lower ADR overall and lower revenue for them. Okay? Your rooms for a suite is a big chunk. Food and beverage will usually be lower because suites will have a kitchenette within them. So you might have some food and beverage available in a suite hotel, but not as much as you would for a full service. Okay? And then other operated departments, you'll see a bit more of a split there. They'll have a higher split than full service, and then same for miscellaneous income. Your resort hotels, look at that, only 50% of their revenue comes from rooms. Food and beverage becomes a lot more, but look at the other operating departments. Okay, so if it's a resort hotel, you should see these two numbers be relatively higher than all of these other types of hotels. And that's because when people go to a resort, they're staying on site more and spending more money on site. Okay, there's more offerings too for your other operating departments. Rooms department expenses. Okay, some key facts. Resorts rooms department expense is low, but that's because the room overnight prices are high. So relatively speaking, not so low. So if you take a look here, okay. RDE, rooms department expenses, so rooms department expense compared to your rooms revenue, you'll notice that RDE is low here for resort hotels. but resort hotels charge a lot more. If we go back to your ADR, see how much more they charge. So even though this looks low, okay, it's actually kind of high. It's misleading. Okay. Average rooms department expense nationally is about 30%. So you'll see full service hotels is about the same. So rooms department expenses are about 30%. Limited service is less, okay, because they have less offerings. Suite hotels might be a bit more because there's more to the room itself. It's a bigger room. There's more expenses for that room. And again, resort hotels, it's just misleading. Nationally, labor expenses represent 19% of room revenues. 19% of rooms revenues. And all other costs amount to 11% of rooms revenues. So this is when we're looking at a rooms department. Okay? So labor should represent 19% of our rooms revenues, and all other costs about 11% of rooms revenues. So when you're taking a look at your rooms department schedule, you should be able to see whether or not you're staying within the industry average. For food and beverage department expenses, you'll notice that expenses are quite high when we look at hotels. Okay, your food and beverage department expenses are going to be relatively high. Hotel restaurants charge more for F&B than regular restaurants, so expect lower cost of goods sold. Food and beverage enhances the experience and brings in guests. It's not a loss leader, but not a big money maker. Okay, so if you take a look, you're not making a ton of money with this kind of percentage. Food costs are going to range between 22 and 35%. Lowest is the higher end hotels because they charge more for a meal. Okay, lower than industry restaurant industry would probably be also because of banquets for a resort. Okay, if you have more banquets, that's going to bring down, okay, your food costs. Your beverage costs will be 20 to 25% for a hotel. Maybe higher for a limited service hotel because they have smaller quantities. And the high-end hotels will have lower costs of goods because, again, you're charging a lot more at a higher luxury hotel for any kind of beverages. Just like in a restaurant, your cost of goods sold and labor represent the majority of expenses. Okay, so if you take a look at the examples I just spoke about, okay, when we look at our prime costs, it represents the biggest amount of controllable expenses we have control over. Okay, and then all other expenses within a food and beverage department should be 5 to 15%. So you should really be able to use these industry averages within your departmental schedules, and that's why it's important to look at those as well. Other hotel expenses, admin and general should be 5.5 to 7.5 of total revenues. Information technology, so any kind of PMS or anything like that, should be 1 to 3. Marketing, it says 4 to 7. This should be updated to almost up to 9%, but somewhere around 4 to 7, 4 to 9% of total revenues. Your property operation and maintenance should be 4 to 6%. Okay. Utilities 3 to 4.5%. Okay. So these would be the main expense lines that you'd want to look at and compare to your industry average compared to your total revenues. So we'd go our admin and general expenses. These are all common size percentages. Everything we've been looking at are common size percentages that you have already looked at within your income statement analysis. It's just important to know the industry averages and compare them to how a hotel or restaurant are doing. And then income before non-operating expenses. Okay, we should see 30 to 35% for full service, 38 to 43% for suite, 53 to 58% for limited service, and 30 to 35% for resort. Limited service hotels provide the best bottom line to revenue ratio. Okay, so they'll provide you with the most because there's no food and beverage. There's no other departments to operate. It's really just your hotel that you have to operate. And if you can control those costs, you can get a higher bottom line income before non-operating expenses. So those are hotel industry averages. Feel free to review this presentation a bit more. Feel comfortable with these industry averages so that you can use them in analysis.